Hello traders, this is Blake Morrow and you are listening to the week ahead video for January 24th, 2021. I want to welcome you guys and gals today. I hope you're having a great weekend. Before I get into the charts and I get into what I have stored for you is kind of special today. I'm going to show you how the sausage is made from a technical standpoint for some of these instruments that we follow, like some of the currency markets. But before I do that, I want to ask you for a favor. Please give us a thumbs up. If you find these videos beneficial, you've been watching them for the last several years and you're like, man, they really help me a lot. Give us a thumbs up. Give us a retweet if you see us on Twitter. Give us a share if you see us on LinkedIn. We really appreciate that. It means a lot to us if you like, share, and subscribe to our channel. It helps us on YouTube. It helps us gain in popularity so other currency traders can learn about ForexAnalytix and what our team does for the community. So please do that. Thank you so much. I really personally appreciate it. All right, now I'm also going to go into the charts in one moment, but I have to mention this is the last week end of this special pricing for ForexAnalytix. So get involved. It's not only just the mobile app. It's not only just the technology. It's not only just the benefits of having data flash, live squawk, calendar events, risk management calculator, all the analysis at your fingertips, from a basic technical analysis to advanced harmonic and Elliott wave technical analysis. It's not just that. It's really our community. I'm filming on a Saturday, guys, and there are people chatting in our chat room the last night and today, which normally doesn't happen, but it's a busy market, and we're starting to see a lot of activity, even in the chat rooms. By the time I get up at 3 o'clock in the morning, and by the time that we start filming and going live with our daily F.A.C.E webinars, there's usually already 100, 150, 200 messages with traders sharing charts and ideas. So be involved in our community. And it's the price right now is the best you're going to see all year. And when it goes away, it's gone for a while. So, and you probably won't see it until the summer. So with that being said, let's get into next week. Next week's going to be really important. Why? Well, we got a Fed meeting. And that's on Wednesday. And that's going to be really important to the dollar. And the reason why I wanted to do this technical analysis with you guys and kind of show you how I do it, it's because we are at a pretty important inflection point in the dollar and in a lot of different currencies. So I'm going to kind of show you what I'm looking at that's so important. But the reason why I'm talking about this is because this week we had the ECB meeting, and we had Christine Lagarde talk about, she really was more positive on the macro environment. And if we have a similar situation, okay, where the FOMC talks a little bit more positive about the macro environment. And by the way, Fed Chairman Powell, he is going to obviously reiterate that rates are going to stay low forever and ever and ever and ever. I'm just kidding about that. But really, he's going to talk about rates staying low through 2021 and probably 2022. He's going to assure the market that he's going to do that. But if he starts to talk positively about the economy and about how, things are looking better, then the market's going to start talking about tapering, not tapering, well, maybe even tapering, but they're going to start debating it and about how the Fed might actually cut or taper some of its purchases that we do on a monthly basis. And that might start to happen, or that chatter might start to get a little bit bigger as we head into summer. And what's that going to create? That's going to create a little bit of nervousness in equities and possibly strengthen the dollar. So that's what we got to be looking out for this week. So I'm not gonna muddy up my S&P charts because they are pretty important. I left everything where it's at because it's important to me that we know where everything's at right now. The S&P longer term, I mean, we've broken out, and even the megaphone pattern that if you've been around listening to me long enough, I've traded against this megaphone pattern multiple occasions, as we've, knocked our head up against it. You get short risk and then you buy a dip when we dip down to like a 38% retracement, and then we start buying risk again. We get close to the top, you got to start fading risk. And then obviously at the end of last year, we just kind of started grinding past this megaphone pattern. So I'm not paying attention to it right now. I'll pay more attention to it if we drop back below like 36.50. That's not happening, I don't think, this next week. We shouldn't even get anywhere close, but that doesn't mean that we can't or shouldn't be aware of it. What I am more conscious of right now is actually the channel that you see here in the S&P, because you do see a similar channel in the NASDAQ, which I'm not going to show you the chart today. If you follow me via Twitter, you've seen that chart because I posted it just this last week. I am Pip Czar on Twitter, Pipczar. Yeah. I didn't give myself that name. That was given to me in like 2005 by some of our community when Twitter first started, and we had a car czar, and somebody called me the Pip Czar, and it kind of stuck. And so it's a long story, but that is who I am on Twitter. I've run with it, you can't blame me. It's a kind of a cool name. Anyway, I digress. Let's talk about the S&P, but what you'll notice here is in this recent run up from January 18th, just this last week, right, to the highs, we backed up is a 30% retracement. So a 38% retracement is, keeping us very much in the bull camp. What I'm worried about is if we break through like this 50% retracement here. If we do, then that might signal to me that we're heading back down towards, obviously these lows right here, but quite possibly back down towards channel support over the course of the next week or two, which makes sense, being in the channel. But that's what I've got to be looking out for. What we should be looking out for is about this 50% retracement around the 3,800, because I think if we drop below 3,800, you can see there's a 618 right here at 37.94. We start breaking below 3,800 roughly, that might, open the door back down for a move towards 3,700, where I'm going to be more inclined to look for, risk on type of moves. Now, the reason why this is so important is because what I've mentioned to you this last week, last week, a few minutes ago regarding this last week is how Christine Lagarde framed the European situation. How is Fed Chairman Powell going to look at our environment, especially with vaccines coming to the masses over the course of the next probably 6 months? I would think our economy, generally speaking, gets back to some normal footing. So as that happens, the need for less monetary accommodation becomes more possible, and that is the risk really for the economy and the stock market, because the stock market is higher based on fiscal and monetary accommodation, and that's it really. So as that disappears, the stock market gains could be in jeopardy, and that's why we need to be paying a close attention to this. So let's talk about some of the important charts that I'm looking at. First and foremost, let's talk about the euro. The euro, and you'll notice that the charts have nothing but a couple moving averages, like the 200 period moving average, and I have a 50 period. I always keep a 25 or a 55 EMA, and I put a 21 moving average on there, which actually doesn't need to be on there right now because somebody else was paying attention to it, and I wanted to monitor it. But I want to show you the euro dollar just in general. So the euro, if you look at the longer term, and let's do this. Okay. Longer term, everybody should know this. The euro broke a major downtrend line. So that's going to be really key support. I mean, let's just look at this on a weekly basis. There's no reason to be bearish longer term while we're above this red trend line, which basically says while we're above 115, 116, you shouldn't be bearish overall. That doesn't mean we can't see some downside in the euro near term. That doesn't mean we can't get a counter trend move, which that's predominantly what I'm thinking right now. But we have to keep in mind that the longer term trend is higher. And I do believe the euro is going higher later this year. But hopefully what we're going to see near term is we're going to see a bit of a pullback and give us opportunities to buy the euro at better prices. So if you look at like, you know, the daily charts, we had, you know, flag patterns, right? And completions. And you could say, well, we haven't really completed that yet, Blake. And I would say you're correct. But a lot of times when you get a pattern that looks like this, you're going to stop shy of it, especially on this. This would be in a, you know, the second follow-up move. What really was important this last week is where we were supported, which if you take this low right here to the high, you take a fib, and let me change these really quick. You'll notice that we stopped at a 38% retracement and also horizontal support. So what that means is with the euro is we have to stay above that. And if we break below that, then there's a problem. Now, if you look at this, down, this is a pretty impulsive move here. Okay. You'll notice that we stopped around the 38% retracement. The 50% retracement is at 122. 618 is at, 122.35. I actually think that this is going to be major resistance for us this week. So in other words, I don't really think we're going to get above this 122 level unless the Fed and unless Powell is the most dovish you've ever heard him, then, you know, next thing you know, we're probably going to be trading back above 123. But again, I'm thinking that he is probably, even though he's going to reassure us that, you know, rates are going to stay low forever, he might be a little bit more hawkish than the market expects. And if that's the case, then the euro dollar may indeed head back down towards the support. And that's why we need to really be focused on 120.50, which is basically these lows right here. 120.50, and resistance is going to be at 122.30. And what you'll find yourself pre FOMC, like, so we're talking about Wednesday, I betcha we're going to be about mid-range. Because what happens in, you know, when the currency market is expecting something really big, you know, like a big event like the Fed this week, what you'll find yourself is mid-range between two key breakout points. This is where we become neutral. And so the neutral zone will probably be around 121.30. And then post FOMC, we're heading to the resistance or we're heading towards support, and then we could possibly break, right? So that's kind of how I'm viewing the euro. Now, I'm going to only, and I could do this for every currency with you, but I don't want to bore you with that. And I know you're probably already starting to yawn. So I'm going to leave you with probably the most important chart that I'm looking at going into this next week is the Aussie dollar. Now, the reason why the Aussie is so important is because the Aussie really shows us risk aversion and risk appetite. And one thing that I've got to point out that you might notice here is that we're seeing a divergence between the S&P moving higher. And this is here, let's put it on a daily chart, be a little bit better here. The S&P surging to new highs, the Aussie is not. And the S&P is this orange line here, and I'm going to get rid of it here in a second. But you'll notice S&P keeps trending higher, Aussie stopped trending higher. That's a problem, because if you're long the Aussie, what you're thinking right now and what you've been thinking over the course of the last, 12 months, I guess, since the lockdown bounce, back here in, March, April. So less than a year, but you have a very strong correlation between the S&P and the Aussie, right? So what happens is you get traders that buy the S&P, or they see their currency traders, they see the S&P rallying, then the currency equivalent would be, let's buy some Aussie dollars. Well, if you're getting a rally in the S&P to new all-time highs and the Aussie is not participating, then you are now starting to question why you're in that trade, especially if the S&P starts to come down. So that's why next week's going to be really important. So with the Aussie, let's stop here for a second, okay? And let's talk about how important this support is, okay, that we're currently at. Now, if you look at the Aussie dollar and just do this, because this is what I've got drawn. We've got a nice little, and you can just clone that. A nice little channel here. You can see it, right? What you may also notice is we also have another channel that we've been following. Okay, let's take roughly that. Okay, and let's clone that. Let's do that. Okay. So what you're noticing here is that we are in a upward sloping ascending channel. What you'll also notice right here is that this is called, well, this is a failed breakout, which we now call a throwover. And Dale Pinkert, who is our host for the F.A.C.E webinar every day, and he interviews so many people every week. You guys got to make sure you listen to those. There was a great interview that I listened to this week on, some of the Wyckoff strategies, and they're just really wonderful interviews that he does all week long, and they're free, so you guys need to listen into those. But he always calls this this pattern right here a throwover. So when you get a throwover and you get back into the channel, if you break through this channel, this becomes a bearish event. So that's why we're watching channel support. Now, why is it right here so important, where we're currently at? It's because if you really dig deep into the charts and you go into the hourly charts, what you'll notice is this is a pretty important retracement, right? Low to high, 618 retracement, 618 Fibonacci, the golden fib, my favorite fib. And so if you just focus right here this week, if we start breaking below 77 cents, then we're at risk of actually challenging this previous support. Let me grab an arrow. Previous support, which will be 76. I'm sorry. This channel support, which would be 76.40. But more importantly, then you start, if that breaks, again, you have to think about what the S&P is doing at the same time. Oops, I grabbed the wrong thing. Then what becomes really important is if you break through this support zone, then you're going to start talking a full-on retracement, and then we start looking at levels that look like this, because that's a 20, almost. I said it before I drew it, but that's because I know exactly where I'm drawing these charts. So what I want to show you is if you take this low here from November 2nd to this high right here on January 6th, the 24% retracement, which is the very, very, near term fib level, comes in around the 76.26 level. And you can see we start breaking through that, then my immediate target is going to be a 38% retracement that comes in at 75 cents, which, look, from 77 cents to 75 cents, if you think about what the S&P would do, well, let's just put up the S&P really quick. If the S&P pulls back, and we pulled back to channel support in the S&P, Oh, let's remove that and let's do this. If we move back towards channel support in the S&P at 3,700, that probably means that the Aussie is trading back down towards 75 cents. Remember, it has not followed the S&P for the last couple of weeks. As the S&P has hit all-time highs, the Aussie has not. Obviously, there's going to be other things I'm going to be paying attention to. There's other things. The other things would be what copper is doing, what's iron ore doing, what's the NASDAQ doing, what's Tesla doing, there's what's gold doing. There's a lot of other correlations I'll be looking at, as I'm navigating through the Aussie, US dollar, Euro dollar, S&P, dollar Mexican peso, dollar Canadian. You guys want to know what I'm thinking every day? Then you should be listening to the F.A.C.E webinar. It's free. And if you want to sign up for it, we do it every day. And we've done it every day for years. And before that, it was the Morning Edge that I used to do for like the previous 12, 13, 14 years before that. So listen in. And because my ideas, that's a great thing about being a trader, is my ideas can change from day to day. If you're only listening to the week ahead video, you're only getting a very short view of what can, a lot of things can happen in a week. So make sure you're listening in. And that link is right here on our website, or if you just look in the YouTube description, you can find a link to register for the F.A.C.E webinar as well. So guys, gals, I really want to thank you for your time. And I want to thank you for your continued support with the ForexAnalytix community, with the F.A.C.E community, being regular listeners, being supporters of what we do. I appreciate each and every one of you. My name is Blake Morrow. I hope you have a great remainder of your weekend, and I'll talk to you soon. Thank you.